The stock market doesn't care about earnings anymore. It cares about one building in Washington. If you think the market is free, you haven't been paying attention to the Federal Reserve. Every day, trillions of dollars move without a single trade being placed. Your rent, your mortgage, your stocks, they're all reacting to one decision you never vote on. The market didn't break, it was trained. Wall Street calls it the market. Behind closed doors, it's something else. One sentence from the Federal Reserve can erase $1 trillion in minutes. Every morning, trillions of dollars move before most Americans finish their coffee. Stocks rise, bonds fall, crypto jumps, and almost everyone believes it's driven by the market. But here's the uncomfortable truth. The market isn't really in charge anymore. Someone else is. Beat. And they don't trade a single stock. If you've wondered why prices exploded, why interest rates shot up faster than ever, or why markets panic over a single sentence from the Federal Reserve, this is why. Because behind the scenes, there's a quiet deal shaping everything you earn, borrow, and invest. And it's happening right now. We're told a simple story. Markets are free. Prices move based on supply and demand. Investors take risks. Losers lose, winners win. Central banks? They're just referees. Neutral, boring, technocratic. That story used to be mostly true. It isn't anymore. Here's how it really works. Central banks control the price of money. That price is interest rates. Lower rates mean cheap borrowing. Cheap borrowing means more risk. More risk means higher asset prices. Stocks, real estate, bonds, everything floats higher. And when markets fall too hard, rates drop. Liquidity floods in. The pain mysteriously disappears. Over time, markets learned something important. The Fed blinks. So an unspoken deal formed. Markets take bigger risks because they believe central banks won't let things collapse. And central banks? They intervene earlier and more aggressively because markets have become too fragile to fail. No handshake, no contract, just behavior. Repeated, rewarded, normalized. Here's the math nobody likes to say out loud. The global financial system is drowning in debt. Government debt, corporate debt, household debt. At today's levels, even small rate increases can break things. Banks wobble, housing freezes, governments panic. So central banks are trapped. Keep rates low and fuel bubbles, or raise rates and risk collapse. There is no painless option left. Publicly, we hear confidence, strong economy, soft landing, resilient consumer. But underneath, markets aren't pricing reality. They're pricing policy reactions. Not earnings, not productivity, not growth. Just one question. What will the Fed do next? That's not capitalism. That's dependency. Entire markets now move based on commas, a tone, a raised eyebrow at a press conference. Trillions of dollars reacting to a pause before the word pause is even confirmed. If this were a movie, it would be a dark comedy. Unfortunately, it's real. Asset prices rise faster than wages. Risk is rewarded more than work. Stability depends on intervention, and every rescue makes the next crisis bigger. The system doesn't reset anymore. It only escalates. So here's the question no one on TV wants to ask. What happens when markets finally realize the central bank can't save them this time? Because every deal eventually comes due. Fade to black.